Good afternoon and welcome to today's webinar, Single Touch Payroll Reporting, what your business needs to know. My name is Amanda Nichols from CCI. I'll be your facilitator for today, and joining us from BDO is Jason Daniels. So today Jason is going to explain the single touch payroll reporting that comes into place on July 1 next year. He's going to run through what your obligations are, what appropriate systems you need in place, and how to get your payroll data in order. Now, before we start, there is an opportunity to send through your questions to Jason at any time during the webinar. You can do so using the chat box that appears on the bottom right hand of your screen. We'll collate them at the end and we'll go through as many as we can, and any that we don't get to we'll take offline. Also, we will send out a copy of the slides and recording to you, if not today, tomorrow, so keep an eye out for that as well. Okay, I'll now hand over to Jason and he'll take you through today's webinar. Thank you.
Thank you, and thank you everybody for attending. My name's Jason Daniels. I'm a partner with BDO, and I've been asked to talk today about single touch payroll. Before diving into specifically on single touch payroll, I think it's worth touching on where it fits in a changing employee obligations landscape in Australia. Some of you may be aware that the vulnerable workers legislation has recently passed through Parliament, which impacts group employers and franchisors. It's really a flow-on from a number of very high-profile cases where employee obligations have been underpaid, both at a wage level, but also the flow-on effects then onto superannuation, payroll tax, work cover, etc. Single touch payroll is really the federal government's first move into big data from a tax compliance perspective. We're moving from an environment where we've typically reported at year end, then financial information from the business might be 9 months after year end when it's reported as part of a tax return. But the government has generally been working with information that has been usually sort of anywhere up to 12 or even 19 months behind. We're moving into an environment now where under single touch payroll, the government is potentially going to have access to real-time data at a granular level. So it's really giving us a very different way to think about compliance moving forward. And so that's part of what I wanted to touch on today with single touch payroll, is also for people just to think about where it fits in the overall landscape. And I'll touch a little bit more towards the end around data sharing and matching and what we're seeing, as well as some of the activity from regulators and what we're expecting going forward. All right, single touch payroll, and what is it? The easiest way to think about single touch payroll is it's the digital reporting of detailed payroll information at each payment date. So in the same way that you issue a payslip to staff now on your weekly, fortnightly or monthly payment cycle, information that's currently contained on that payslip will be reported to the ATO on the same day. Now, this was meant to be voluntary in 2017. Now, I'm not aware of anybody who's taken up the voluntary lodgements, and that's been in part because the ATO has not been in a position to receive those lodgements from an IT perspective. Everything we're seeing still says they're on track for 1 July next year, and it will be mandatory for substantial employers from 1 July next year. Now, as always, the devil's in the detail about what a substantial employer is in the definition, so we'll touch on that. So as I said, it's mandatory for all substantial employers from 1 July next year. Now, substantial refers to 20 or more employees on the books as at 1 April 2018. Now, it's worth noting that since this has been passed through Parliament and today, there's actually been a recommendation made by the Senate's Hearing Committee, which has been basically ratified by Treasury and by the ATO, and we're just waiting to see the legislation, where single touch payroll will go across whole of economy from 1 July 19. So regardless of the size of employer, everybody will be required to report under single touch payroll. So even if you may have a technical reason or be able to apply for an exemption from single touch payroll, it's only going to be short-lived. Now, who's an employee? Now, broadly, it's an employee as defined under common law. But obviously understanding who was an employee at 1 April to determine whether you are a substantial employer or not is important. So the ATO has provided some additional guidance. So if you had any casual employees who worked in March 2018 should be counted as being current employees as at 1 April 18. Any employees based overseas, so even if they don't have any Australian employment or payroll obligations, but they are employed by you overseas, need to be counted. Employees who are absent or on leave, if they are current employees, need to be counted, as well as seasonal employees. Now, one of the things that's really important to note here is once you trigger being a substantial employer, even if you fall below the 20 employees, you're still captured by single touch payroll. Now, as I said before, this was probably much more of a debating point before it was announced that this would go whole of economy. But now that it's going to go whole of economy, we're really just talking about a timing issue anyway. Now, one of the other important things to note is unlike a lot of other government legislation or particularly around some of the ABS stuff, this is based on head count. There's no full-time equivalent allowance. You should also note that once you're captured under the single touch payroll, the exemptions for getting out of it are very, very limited. You fundamentally have to be in a remote area where you've got no internet access. It's pretty much the only way you're going to get out of it. Now, one of the important things, in addition to understanding who is an employee, is understanding who's not an employee. So staff provided by third-party labour hire companies are not considered employees. Office holders and directors who are not employees are not counted. And that's an important change from the original exposure drafts. So in the original drafts, all office holders, directors, secretaries, etc., were counted as part of your employee headcount, regardless of whether they were remunerated or not. And this had a significant impact, particularly on not-for-profits that might have a board of 7 or 8 directors, even though they weren't actually paid, in terms of triggering this substantial employer component. The ATO has since released additional guidance to say if they are not employees, so they're not paid in the normal payroll with normal withholding deductions, then they're not counted as employees. The other thing would be any casual employees who did not work in March 2018 would not count towards the 20 head count for triggering the substantial employer rule. But obviously, if you cross over into 20 staff at any time after April 18, you're going to be considered a substantial employer. Now, there are group employer provisions that need to be taken into account. At the moment, the group employer provisions specifically refer to companies within a group. We're still asking a lot of questions around the definition of a group, for example, whether it captures trusts or not. We're also looking at where you've got, you may have consistent shareholders for parts of the group but not for others, as to what that definition of grouping is. At the moment, we're erring on the side of caution, and we're assuming that the grouping is going to be fairly widely caught, because regardless of whether we do it now or 1 July 19, we're going to be in that net fairly shortly anyway. Now, one of the little hidden things I think could be in the single touch payroll piece to consider is around independent contractors. A number of people have asked me whether or not they can transition employment arrangements to independent contractors. The laws around independent contractors, tax, payroll tax, SGC, etc., are obviously fairly complex and subject generally to a lot of case law amongst the regulators. So it'd be something I'd be taking a lot of advice on before making any changes. But one of the things you've got to remember is if we're capturing all of this real-time information around employees, then it's going to highlight who the contractors are very easily. So in terms of future audit activity, I think that whilst single touch payroll is going to be a trigger, it's also potentially going to be a trigger for reviewing independent contractor arrangements. So one of the things that's important to understand is what's going to be reported. Now, at a very high level, I like to explain to people that if you work on the basis that what you report on your payslip is what's going to be reported to the ATO, then you're safe. That's a good starting point. Now, in phase one, and bear in mind that it's been quite publicly discussed that this is one of a number of phases the government is planning around single touch payroll and capturing payroll information. In phase one, we're capturing year-to-date payment of salary, wages and ordinary times earnings, year-to-date PAYG withholding withheld for that employee, and superannuation. There are other payments that need to be reported. So, for example, if you have workplace giving, if you have withholdings on behalf of staff for Centrelink or Social Security, they need to be disclosed as well. But if we work on the basis that that's the starting point, and this could be extended in future to capture everything from annual leave information, hours worked, what award they're going to be paid under, because we've certainly seen proposals to extend the data that's being captured. This is a good opportunity to get your house in order around all of that. Now, where this is going to require a lot of employers to really tighten down their payroll systems and processes is this information needs to be provided to the ATO at the same time as payroll processing. And the legislation specifically talks about at the same time that payment is made. So if in the past there might be a lag between releasing pay slips, for example, and payments, this is something that you're going to have to look at as part of your process. And I'll talk a little bit later about some of the war stories and things we've seen in reviews we've done so far. Now, provisions for managing errors do exist. The main provision is the fact that you actually report year-to-date information each pay run. So it's not the actual payment for this period, it's the year-to-date payments. So minor errors can actually be fixed by just correcting it in the current year-to-date information. For more material errors, you will need to go back and adjust the prior period. But at the moment, we're thinking that most people will just be captured through the year-to-date information that's provided. Now, hopefully this is the easiest part of the implementation for most people, and that's how is it reported. Your payroll software should be updated to enable SBR reporting. So single touch payroll to be able to, at the end of the payroll processing run, when you finalise the payroll, we're expecting to see a new function or a new button that basically says lodge to ATO. And it should really be as simple as that. Now, that will go through some internal checks of the data that's being provided. Hopefully it will flag to any errors or issues with that data, but basically provide you with a very simple mechanism. You will need to have, obviously, an AUSKey for security and authentication. That's what we're expecting at this point. And certainly the software providers we're talking to, the likes of KeyPay with QuickBooks Online, Xero, and MYOB, we're certainly seeing that they're going to be on track for 1 July next year.
I just want to stop you there for a second, Jason. We've had just some questions come through just to clarify. I think you mentioned earlier what SBR stands for, just while we're on this slide. Yeah.
So SBR is Standard Business Reporting. It's actually a project that was started by the federal government 10 years ago, which was designed to harmonise reporting across government and make it digital. So it was trying to move away from form-based reporting done at period end back to taking natural business data and supplying it electronically to government. So it's an ATO-sponsored program. In most cases, you can actually tell if your software is SBR enabled if you go to the software vendor's website. They will often have the SBR logo on there. So in terms of understanding where your payroll software is, I would start by going to the vendor's website, checking where they're up to in relation to SBR. Xero, QuickBooks, MYOB, the big providers all have a statement online about where they're up to. If that doesn't work, contact your vendor directly and ask them. I would expect that the response you're going to get at the moment will be, we're ready when the government is. The government has unfortunately been a bit slow in releasing some of the technical requirements for software developers. So we're seeing that a lot of them are working on that now. It's actually in motion. Okay, so what's in it for business? What's in it for business is quite straightforward. It's relief from producing payment summaries for staff at year end, relief from part year payment summaries, relief from the annual summary that's submitted. The ATO has quite unashamedly stood up and said that this is very much around improving the quality of reporting and the quality of data. It has never been about dramatically reducing the reporting burden for business, but by making it a part of the natural payroll process and submitting each period, it also shouldn't be an additional reporting burden for business. And certainly in the work that we've been doing with some clients to date, that's been our experience, that once your payroll processes and systems are right, this shouldn't be a significant burden. Because obviously if your payroll's right, then producing payment summaries and annual summaries should just be a byproduct of having that data correct. One of the suggestions that has been made is to starting to remit PAYG withholding with each payroll, and certainly in the recent Senate Hearings Committee findings, they've recommended that PAYG withholding payments be moved to monthly. Now, that we haven't seen any endorsement yet from the ATO other than them saying that it's best practice. I've not seen any move to make that a legislated change. But what I'm expecting is that once the ATO starts collecting data around the real-time calculation of PAYGs to the point where they know what should be expected with the next BAS versus what's actually then reported and paid, I suspect that that's where we'll then start to find some legislative change being recommended. There's also no changes in the timing of super at the moment. But again, one of the big outcomes of this is going to be data matching between superannuation obligations calculated and superannuation payments received by the super funds. There's been a number of, again, legislated changes that will require super funds to provide details of contributions received to the ATO to allow that data matching to take place. Okay, so what's in it for employees? Now, hopefully this is where it will provide you with some benefit in terms of streamlining, as having run outsourced payroll before, I know how much of a challenge it can be getting TFN declarations, super funds, etc. In a timely manner. Where employees are set up on MyGov, they'll be able to do their TFN declarations online. They'll also be able to set up their choice of superannuation fund so that they can basically take that from employer to employer to streamline the setup and onboarding of employees. Again, one of the stated objectives of Single Touch Payroll is to reduce the amount of TFN fraud that's been occurring in the economy. I'm certainly aware of scenarios, particularly where there are seasonal or itinerant workers or uses of backpacker labour, where you could almost go into a backpackers and get a list of TFNs off a notice board, and a lot of TFN fraud that was happening. So by validating that around things like date of birth, address, and other key information, you'll have a lot more confidence around who you're dealing with. The other big change that was recently announced that in terms of benefits for employees is they're going to be able to log in and be able to see what their year-to-date earnings are per employer, be able to see what the year-to-date withholdings were and superannuation contributions. So in terms of being able to manage their own tax affairs and plan, it's going to provide them with real-time or near real-time data to be able to do that. I would expect that in the not too distant future that they'll also be able to see that their superannuation contributions have actually been remitted by their employers. Now that's just my opinion. I've not actually seen that anywhere in the formal documentation, but I know it's certainly been discussed openly in a number of forums. So that's basically Single Touch Payroll in a nutshell. I guess the question from here is, what does this all mean? I'm expecting that there's going to be an increased focus on compliance, but it's going to be through reduced efforts by the regulators. So by having access to real-time information that's up to date, they're going to know what they're looking for and when they're looking for it. So I'm expecting that we're going to get a lot more inquiries before year end. And that could be around superannuation, it could be around incorrect withholding information. We know from some case studies that it costs roughly 6 times more to deal with an audit or inquiries after the company's tax return has been lodged as it does to deal with it through the year before year end. So this is all about getting increased compliance, but through reduced effort on behalf of the business, the regulators and their advisors. One of the things that in terms of that compliance, something to take note of is that the ATO have said they're very much taking a go-forward position. Now, if they find that there has been systematic errors or issues, or they believe that staff have been underpaid specifically in relation to SGC, they will go looking backwards. But they have said in terms of compliance, they're taking very much a go-forward approach. One of the, I guess, the flow-on effects from that is we're going to need quality data to highlight issues and manage exceptions. We're moving into an era where potentially the regulators are actually going to have better quality information than you as a business owner or ourselves as advisors in terms of how these issues are managed going forward. They'll be able to take data and match it to Centrelink. They'll be able to match it to immigration. They'll be able to look at, for example, benefits received from Medicare. So there's a whole heap of things across the economy that I think this is really the first step in how this data is going to be used. New systems are going to be required to measure and manage risk, particularly if you're involved in franchising or you're a member of a group of companies in a group employer arrangement. And I'll touch on that in a moment. The other thing is to beware to audit and targeted review activity. Most people have probably already heard the stories around certain industries being targeted by the ATO, OSR and Fair Work. That's only going to continue under this arrangement. They're going to learn a lot from the data they're capturing in real time. They're going to be looking at industry compliance as well as employer compliance. And we've even seen some initial designs around dashboards looking at where a shareholder might have shareholdings across a number of businesses. How compliant are those businesses where they have those same relationships or same advisors? So I'm expecting to see a lot more very targeted audit activity going forward. Sorry. Data sharing and data matching. As I said before, I'm seeing this as really the first step in the government capturing really granular transaction-based data in real time that can be then shared and reused across federal agencies, state agencies, and I've already touched on the super funds. Now, where this should reduce the reporting burden over time for business is that if the government has this information once, it won't need to be re-asked by, for example, WorkCover, OSR, and the ATO. What it does mean, however, is that they will all be working off that same data, whereas in the past, and I'll use OSR as an example, they've relied on the information provided in payroll tax returns, which may or may not have been correctly defined. Payroll tax is one of those areas where I see a lot of people making mistakes around what they're classifying as ordinary times earnings, what they're including in the calculations, the claims of what's paid in that state and how staff are correctly classified by state. It's probably the area where I see the most issues, where going forward the OSR will potentially have access to some very high quality data to come knocking on the door. Look, again, I probably touched on this, but touching on how the regulators are responding. Fair Work is probably an interesting one to touch on, in that a lot of Fair Work cases, we see a lot of the findings being made publicly, and we've certainly seen a number of them pay out through the press, particularly in relation to underpayment of wages and so on. I was at a presentation not long ago where WorkCover stood up in Queensland and quite publicly said that they were taking notice of all this press. They were looking to work collaboratively with the ATO and with Fair Work to ensure that WorkCover was correctly reported. My expectation is that, subject to privacy, these regulators are going to collaborate and undertake audit activity a lot more closely together, and that if you get a visit from one, you can expect a visit from a number of them in very short periods of time. So whilst privacy may prevent them from sharing the information, what they can do under the data sharing arrangements I believe, is that share the search algorithms as to what is actually flagging that information. And so if it's flagged to one, it will be flagged to all. It's one set of rules across all, if that makes sense. Now, to give you, I thought it was worth giving you an idea, and this is an area that I do quite a bit of work in franchising and with group employers, but I thought it was just worth touching on potentially how single touch payroll could have a flow-on impact across your business. And each industry will be affected differently, and there'll be different pieces of enabling legislation that will let this happen. But this is just an example. So under single touch payroll, you'll now be providing real-time payroll data to the ATO. So they'll be able to check whether franchisees are withholding superannuation correctly, paying PAYG withholding on time, paying super on time. So let's just work with that scenario. Under the vulnerable workers legislation, franchisors are now potentially responsible for franchisee breaches of Fair Work, which does include non-payment of superannuation or incorrect calculation. It also potentially includes unpaid PAYG withholding, so if the BAS is not paid on time. And then if you look at the Franchise Code of Conduct, where the franchisor is required to have an audit of their solvency each year and declare their solvency, breaches by franchisees and non-payment of things like superannuation could potentially bring a franchisor unstuck and then potentially flow on to a whole heap of other franchisees. I've recently done a review of a group with 75 franchisees. We found significant amount of underpaid superannuation and PAYG withholding in that group. If we were to recognise that as a liability for the franchisor, that business would be insolvent. The flow-on effect to suppliers, bankers, other staff is actually very, very material. So we've been involved with, I guess, a number of views where people have sort of said, oh, look, single touch payroll really doesn't impact me. I'm not expecting any issues. One of the things to understand is what's the flow-on effect of any issues that might be found. Now, what I've described here in the franchising sector is probably a bit of a perfect storm in terms of a number of pieces of legislation that have become enacted back to back, but that data will now be available in real time. And one of the challenges we have out of it is, for example, the franchisor actually doesn't have a right under privacy to know whether the franchisee has paid that on time from the ATO. We have to get that information from the franchisor directly. So we have an anomaly which we've actually raised to Treasury, where the franchisor could be responsible for franchisee payments that they're actually not entitled to know about. But these are the things that are in your particular industries you really need to understand and get to know, because it isn't going to need new systems to monitor compliance, because it's usually, people don't usually intentionally go out to breach their compliance obligations. Okay, some of the issues that we found so far, and I guess this is some of the war stories and some food for thought. Reporting our income, whether it be from a personal tax return or from employer, gets used in a whole series of places across the economy. So as employers, and so for example, I've been an accountant in an organisation before where we had staff on 457 visas. Every 457 visa application required a HR agreement where we had to say to immigration what their remuneration would be. In the past, when it's come time to do any form of data matching between immigration and ATO, there's normally been a substantial lag from that person being paid to that person's payment summary being lodged with the ATO to that person lodging their tax return. And given that most 457 visas are sort of fairly short in their time frame, quite often by the time it got to do anything about those data mismatches, you're coming to the end of that visa period. ATO is now going to have access to this data in real time. So they're going to be able to match what you're paying as a gross weekly or monthly and be able to match that to what was set to immigration. And again, what they're looking at here is not necessarily hard and fast data that says you do or don't match. What they're looking at here is risk. So they're looking to see, is there a systematic issue here where we may have an issue where we want to ask more questions today in real time? Or is this an issue that where we can see risk, for example, across a number of employees? Other areas where we're seeing issues around income reporting is where you've got staff who may be getting income from multiple sources, but are also getting income from Centrelink based around family benefit payments, pension payments, where there's a restriction on the dollars or hours they can work. Now, whilst that's normally an employee issue, my concern is for my clients is the pushback you start getting from staff as part of the payroll function. Because again, quite often this stuff's been known about well after year end, they'll go back to the employee and say, you owe me money for over earnings. This is stuff that's going to be able to be flagged in real time. And if you look at some of the debate that was had in Parliament and some of the sales pitch, I guess, that was put forward around why single touch payroll, savings to the economy in terms of capturing these benefits or clawing back these benefits or turning them off in real time has been one of the big parts of the sales pitch for single touch payroll. So my concern there about getting your house in order and getting things right there is just making sure that you don't create a huge admin burden for yourself once this goes live. Treatment of allowance and reimbursements. I've seen a lot of clients where they haven't treated things like motor vehicle allowances correctly. So they've paid a monthly car allowance, a fixed amount. They've not withheld tax or paid super on it, but they've also not gone to the government to get a variation for that employee for the ATO, or the employee hasn't gone and got a variation. So incorrect withholding. Now, the ATO haven't worried too much about that because by year end it all washes out. They're now going to know about that incorrect withholding in real time. They'll be able to check is an approved variation on file and push back. I see staff reimbursements being paid incorrectly because payroll's set up incorrectly, and it's reported as part of ordinary times earnings, where again, it might be something that gets cleaned up at year end before payment summaries are issued when trying to reconcile. So these are the sorts of things that are now going to have to be right up front as you're paying each pay run. Superannuation compliance, this falls into two areas. One is correct payment of super, so correct calculation of ordinary times earnings, what's being included in super calcs. We still see a lot of issues around people being unsure as to what to pay super, and I'm referring here to both overpayments and underpayments. We've seen probably just as many overpayments as we've seen underpayments. The other piece here is around timing of payment. And I think this is where we as an economy could get ourselves into a little bit of trouble, and where the ATO may use this as a trigger to change the law around timing of super payments. That's just my personal opinion, by the way. In terms of the timing of payments, I see a lot of clients who will pay superannuation monthly as part of their trade creditors run at month end. So what you actually have is 2 months that are compliant and 1 month that is non-compliant. It'll be paid 2 or 3 days late. The ATO is now going to know exactly who paid them late, what was paid late, and potentially come back and automate the payment of the SGC shortfall for you. So it's going to create another admin burden for you. So paying attention to the payment of super. The other thing that's going to happen is if you've got staff who haven't given you their super fund and you haven't put them into a default fund, again, that's not something you're going to be able to just clear up at year end. It's going to become really obvious each pay run. Payroll process and transparency. My concern here is more around things like fair work. Because again, once we've gotten into the detail with clients, we found that, for example, there's a lack of clarity around things like timesheet processes. I'm surprised at the number of people who don't have employment agreements or up-to-date employment agreements in place with staff. We still see a lot of underpayment under Fair Work and the awards. And in fact, last year I resigned from a client because they were paying staff cash in hand on a Sunday, didn't want to pay the award rate because it was substantial penalty rates, and yet had substantial income flowing into the bank account from their POS on a Sunday. This is all stuff that under data matching is going to stand out really quickly and really clearly. And you're going to find industries like fast food, for example, are going to be in the crosshairs pretty early. And they're going to be looking for things like, and particularly as we move more and more from having cash in the economy to very much all digital payments, it's going to be very easy to match when sales were made versus what staff you had on hand at the time. The Fair Work piece is probably more exposure around appropriate sign-off of timesheets, people clocking on and clocking off at the right time, and being aware of their rights. The final one, and this is the usually the bad news that I get to give to a client, is around the compounding effect of the errors. Because generally, if you've had a breach of Fair Work and you've underpaid staff, you've typically also underpaid OSR, you've underpaid SGC, and you've underpaid your work cover. So the compounding effect is the fact that you generally have got a cost of just being compliant with all of those regulators, but also then, and some of you, hopefully not many of you know this, but some of the organisations like OSR are usually not very negotiable around interest and penalties, which can be very substantial. So I guess the key message to take away from today is that there's still time between now and 1 July for everyone to get their house in order. And the focus should be very much around getting the systems and processes surrounding payroll right so that the outcome each pay run is correct and something you've got confidence in. So that when you submit that to the ATO and that's used for their data analysis and their data matching and any queries that come back, you're confident in the data that you've provided. Everything's got to be basically starting to think about the fact that this information is going to be in real time and looking at what data you've got access to so you can do your own real-time data matching. So you can be looking at your own staff who are on visas and looking at, are you paying them? So if they're a student on a student visa with 20 hours per fortnight that they can work, are you within that? Does your timesheet and rostering system limit to you what you can do? So it's not necessarily just about payroll, but it's around the HR systems and processes that sit around that as well. Get in touch with your software providers. Find out where they're up to, what they're going to be providing, what review process you can put in place between the final pay run and submitting it, and what other functionality their product might have to help you actually reduce this risk. If you do need to change payroll software providers, you want to actually give yourself plenty of time to do that. Setting up and migrating staff, if you've ever done it on a payroll, can be a complex and challenging task. And then obviously things around employee communications. If you've got a large casual staff pool or itinerant staff, making sure that people are set up on MyGov, they're doing their online TFN decks, they've got their super set up. Try and get as many of the advantages out of single touch payroll as you can, and try and remove as much of the paper from your system as possible. So that was really, I guess, the sort of the core of the presentation and my takeaways. I'm happy to open up for questions.
Excellent, thanks, Jason. We've got quite a few questions to get through. We've had a few people asking the same question about your reference to an AusKey, and basically, does anyone that is doing payroll will need one, or if you're using programs like Xero and QuickBooks, do you need this AusKey?
I will take that on notice and I will come back and confirm exactly. Certainly the last discussions I was involved in were you'll still need to be able to authenticate with the ATO that you're the right person lodging the right payroll for the right company on the right day. And it was very much, at the moment, the authentication method for SPR is AusKey. But I'll go back to my contacts at the ATO and confirm that that is what they're going live with at 1 July. Because I know there has been discussion around some mobile two-factor authentication to try and simplify that.
Yeah, sure. Thank you. Another question: if you're, do you need to switch to single touch payroll system if your employee hits over 20 in that period between the 1st of May and 1st of July?
It's basically how many staff you've got on the payroll at 1 April, with reference to how many you had in March. If you go over 20 from the period 1 July forward, then you're going to fall under single touch payroll. The commentary is actually silent on what happens if you go over 20 between 1 April and 30 June. I would assume that you're going to fall into single touch payroll, and I'd be prepared for it on that basis.
Okay, and what about workers whose salary sacrifice? Is this reported as part of the real-time data that's lodged?
what's reported is the gross payment and the withholdings. So whilst there isn't necessarily a specific line for the salary sacrifice, but if, for example, it's being sacrificed into a superannuation contribution or another payment type, it's either going to fall into that gross or a specific payment type. But I can provide a little bit more guidance around that.
Would payments to independent contractors also be reported when paid? And this person wants to know, especially important if not processed through the payroll.
Sorry, if they're an independent contractor that you're bringing on board as a casual or part-time employee, and you're treating them as an employee, so i.e. you're not paying them on invoice from their ABN, then they would come under your payroll and your normal payroll process. If they're a contractor operating an independent business under ABN, it's not captured by Single Touch Payroll and wouldn't be done through payroll.
Okay, loads and loads of questions. Sorry, I'll just try and get through as much as we can. There's a few that are sort of asking the same thing. So what about all the micro businesses who do not have payroll software and not computer literate in using these systems? What happens with them? Will they be coached to get onto something?
From 1 July 19, small or micro businesses, I'm assuming, have less than 20 employees. You'll need to be on a software product that will enable you to lodge with the ATO electronically. The government is not going to allow lack of knowledge of how to use the systems as a reason anymore to not do that. The only valid reason I've seen put forward has been where you're an emerald miner out in the out where you've basically got no access to internet. I would recommend for small and micro business owners is there's some very good payroll bureau services and HR bureau services, because you want to make sure you're not just covering off on your payroll risk here, but also your HR risk, and looking at using a bureau service as part of doing that. So effectively outsourcing it to help you with that process.
And I'm sure you touched on these reportings, but we've got a few questions about will state payroll tax be given the information from real-time data, so an annual return will not be required, or monthly reporting no longer required?
There's been no guidance from OSR yet, certainly that I've seen, basically removing the need for that monthly or annual reporting. So I'm assuming at this stage that is still part of the requirement. Now, I have been involved in some discussions around that is definitely part of the future vision, but I don't know what the timing of that is at this stage. I think what we've got to look at is how you use the data out of your payroll to natively produce that without having to do a lot of spreadsheet calculations in between. That's certainly part of our challenge at the moment with OSR obligations.
Okay. Do you feel with what all this that we've been going through today, is this going to be an excuse for them to look back at prior history?
The ATO have said quite publicly that they're looking at compliance going forward and businesses being highly compliant going forward. Now, that being said, and unfortunately we do see it from time to time, if they find an issue that where staff have been materially underpaid, and in particular superannuation obligations have been breached, I think they are going to look backwards, but I think they're going to do it on a case-by-case basis. If it's been a systematic, almost bordering on fraudulent issue, I think they're going to look backwards quite aggressively. I think if it's a one-off error or one-off issues that are easily explained and you can show that you've taken action to make sure it's addressed, that they'll take very much a go-forward approach.
Another question's come through. Can you confirm that they would submit or lodge something to the ATO in between payroll days? So, for example, if they're cashing out annual leave for a termination, that'll go.
Yes, it will. Yeah. Now, one of the things you've got to be careful of in cashing out annual leave is, and unfortunately we see it quite often where employers may not be aware of the obligation under Fair Work as to what can be paid out and what has to be retained, is potentially data could be used by the ATO to flag reviews where payments haven't been made correctly. Because remember, this data could potentially be made available over time to Fair Work and all the agencies.
How will you define what is reimbursement rather than an allowance? For example, a telephone allowance, which under OSR is defined as a reimbursement in regards to the payroll tax.
So that's for payroll tax. What you have to look at here is what's being paid for ATO. If it's an allowance for which the employee could be reasonably assumed to expend the amount provided, then the ATO considers it to be an allowance. If it's an amount that's being paid, and you need to have some sort of evidence here to back this up, which is in addition to their salary, then you need to withhold. So something like a telephone reimbursement, where they might be on a fixed phone plan or something, is probably much easier to prove than, say, a $1,500 a month car allowance.
Okay, we've got loads more questions to go through, but they're actually quite specific, so we might take those ones offline.
Sure.
And I'm conscious we've been online for nearly an hour now, so we might leave that there. Thanks, Jason, for coming in and presenting. Thank you for everyone joining us. We will send out a copy of the slides and a link to the recording, and we'll just go through some of those questions that haven't been able to be answered, and we'll see if we can get something through to those people as well. So thank you very much, and everyone enjoy the rest of the day, and we look forward to having you online at another webinar. Thank you.
Thank you.